Good afternoon, distinguished speakers, business leaders, investors, and participants. On behalf of Africa Prudential PLC, it's my pleasure to welcome you to today's webinar, the IPO Playbook, what every business needs to know before going public. Whether you're considering listing your business or looking to better understand the public markets as an investor, today's conversation is designed to provide practical insights into what it really takes to become a public company. We have assembled an exceptional panel of leaders from across Nigeria's capital market ecosystem to share their perspectives on the IPO readiness, raising capital, listing requirements, investor expectations, and the critical role of market institutions in supporting businesses throughout the listing journey. So before we begin, we have some housekeeping reminders. Please keep your microphones muted throughout the session. Kindly submit your questions via the chat box and we'll address as many as time permits. And this webinar is being recorded. So having said that, we'd like to invite Mrs. Catherine Wosu, the Managing Director and CEO of Africa Prudential PLC, Nigeria's only listed registrar company with over 2 decades of leadership in the capital markets. She also serves as President and Chairman of Council of the Institute of Capital Market Registrars. Under her leadership, Africa Prudential has driven significant digital innovation and strong business growth, making her well positioned to speak on the future of Nigeria's capital market. Please join me in welcoming Mrs. Catherine Wosu. You're welcome, ma'am.
Thank you very much. Thank you very much. Good to be here. Good morning, good afternoon, good evening, depending on where you're joining from the world. Thank you for joining us.
So, Ms. Catherine Wosu, we would like to have your keynotes now.
Thank you very much. You're all welcome to today's session. We'll be speaking about IPO. And it is important that people understand everything they need to know about initial public offer, which is the full meaning of IPO, before going into it. So IPO, the full meaning of IPO is initial public offer. And I start by saying that IPO is not the destination. It is actually the beginning of a higher standard of accountability. And I want to start by asking some questions. If your business were to be listed tomorrow or today, would the investors trust your financial records? Would they trust your leadership? Would they be comfortable with the level of corporate governance within your entity? What about the technology? Would they be happy with the technology that you have in place? Would they be certain that you have proper risk management framework to ensure that their investment is safe? Would they also trust in your growth strategy before investing in your company, believing that the company will grow and provide value to them? I want us to know that going public exposes what private ownership will hide. When you're a public company, and you have to be a public company before you can do an IPO. And when you're a public company, you are in the open. People will see you. People will see your books. People will see what you're doing. People will ask questions about your plans. And these are very, very critical questions for every company planning to go public to think about. So going public is not just about raising capital. There are a whole lot of things that are to be considered when you want to go public. Yes, going public creates an opportunity for you to access long-term capital. It also helps you to accelerate expansion. It helps to improve your credibility as an entity. And when you are a public company, of course, you'll be subjected to evaluation. And you can have valuers to look at your entity and then be able to assess the level of performance or activities or standard that are obtainable in your organization. It will help you improve your succession planning because people want to know what happens in the event that the owner of the company is no more, or that the promoter of that company is no more. It will also help to attract institutional investors. But you know what? Capital is not the biggest challenge. Readiness is, according to statistics. Statistics show that IPOs underperform because businesses prepare just for listing. They don't prepare to become a public company. There are two different things between preparing for listing and preparing to be a public company. When you are preparing to be a public company, you must prepare to have proper structures within your business environment. You must prepare to expose your business to reporting, to questioning, to scrutiny. You must be ready to be properly regulated. So listing is just one thing that you will do. But being a public company is a whole life of the organization. Speaking about IPO readiness framework, an IPO readiness framework is a structured approach that helps a company prepare for becoming a public listed organization. It assesses whether the business has the financial, operational, governance, legal, strategic capabilities needed to meet regulatory requirements as well as investors' expectations. What does your leadership look like? What are the governance around your business activities? What is your financial strength? How seamless is your operations? What kind of technology are you using to drive your business? What about the people? Do you have competent people in your business? What does your investor relationship management look like? Because investors actually, while you are there, your customers, how are you treating them? What do you have in stock for your customers? These are very, very critical things that we have to look at. So overall, the IPO readiness framework helps organizations to identify their gaps, prioritize improvements, reduce listing risk, and ensure a smooth transition to the public market. Now, it is important that we know that investors buy confidence. They are not just buying shares. Investors want to know whether you can manage the business, whether you are strong, whether you can earn sustainably. Because it's not all about you paying dividend today. Will you pay dividend tomorrow? Will their shares appreciate? Will they trust the numbers that are coming out of your business? Is your business well audited by professionals? Can the risk associated with your business be managed properly? What does your business sustainability plan look like? What does your data protection arrangement look like? If there is disaster, how does your disaster recovery plan ensure that the business continues? These are very, very serious business realities that must be considered. Corporate governance for public companies are not negotiable. And what are the expectations for corporate governance? You must have an independent board. Even if you are the promoter, you are the owner of the business, you must have an independent board. You must have committees. You must have policies. The business must have ethical standards. You must comply to regulatory expectations. There must be oversight as far as your risk management is concerned. And very important, you must be transparent in what you do. When you make mistakes, you must own up your mistakes. You must speak to investors. That is why at times when you look at companies coming to exchange to go and post their position, they give you some guidance. These are what we're expecting. If anything goes wrong, a public company will be expected to come publicly and tell the investors that this is what has happened. But what is most important to the investor is to see the mitigating factor, what you are doing to make sure that the business does not collapse. Another business reality is about financial discipline. Before you go into IPO, you must have audited accounts. You must have reliable reporting arrangements. You must have internal control, so critical, so important. You must have cash flow management. There must be profitability projections. You must comply with regulations, of which tax regulation is part of this. You must have financial projections to show how the business expects to grow and what the business will do in future. Another business reality that stares us in the face is about operational excellence. What are your processes like? What is the integrity of the people that are doing business for you? People that are working for you. How are you treating them? Because the human being is actually the firewall of the organization. You can put every technology in place. If your human being, if your people breach, your company might be exposed. Talk about your technology. Talk about the cybersecurity architecture, your business continuity, scalability, as well as the culture. What culture do you have in your organization? Are you an organization that believes in treating customers fairly, understanding that customers are the reason why you are in business? Another business reality 5, looks at your digital transformation activities. Digital transformation creates investor confidence. How do you engage your investors digitally? Today, investors don't want to come into your office. They want to be spoken to over their phone. They want to engage you with a phone. They want to transact on their phone. They don't want to call you and ask you to do anything for them. They want to do it themselves. Do you have the kind of system that will help you do that? Do you have a system that will enable you do real-time reporting? Do you have digitalized corporate action processing? This is where Africa Prudential naturally comes in, because we believe in using technology to do everything that we're doing. Now, speaking about IPO, let's look at the IPO ecosystem. It is important for us to understand that no successful IPO is delivered by one institution. It is delivered by different professional parties, and I'll just quickly mention them. You have the apex regulator, which is the Securities and Exchange Commission. You have the Nigerian Exchange, which is the exchange. You also have other exchanges, depending on the kind of product. You have the commodity exchanges, you have the FMDQ, as well as others. You have the issuing houses. These are the people that speak to the issuers, prepare them to come to the market. You have the registrars. These are the data custodians. They keep the data at the end of the offer. They participate during the offer, and they are the ones that also keep the data and then keep managing these investors and the life of this organization. You have the stockbrokers who handle your trades. You have the solicitors, who are the lawyers that ensure that every document is in line with both the legal and regulatory frameworks. You have the auditors that will review the books of the company to ensure that the company is ripe and good for the market. You have the reporting accountants who also look at the position of the what the auditors have done and everybody to ensure that the public is not being misled. You have the investors who are the elephant in the room. The investors are the people that come to invest. You also have shareholders. Investors can be shareholders because there are several instruments. It's not only shares. If it is share, you are a shareholder. If it is bond, you're a bondholder. If it is mutual fund, you're a fund holder, as well as other products that we have in the market. Now, for you to have a successful IPO, it must go through proper innovation. You have the pre-IPO support activities. You have the registrar's functions and activities. You have the shareholder register management, digital onboarding, corporate action, a whole lot of activities that happen from the registrar perspective. Africa Prudential is a registrar, and we participate fully during IPO. And at the end of the IPO, we continue to engage with the investors, managing the life of that register of members, ensuring that investors benefit from whatever dividend that the company is declaring. And when the company wants to have meeting, we also ensure that the shareholders or investors participate actively because they are the owners of the business. So Africa Prudential does not simply manage shareholders' records. We enable confidence. So what happens during an IPO? Before IPO, every operator will prepare, every participant will prepare, ensure that everything is properly packaged. Then there is an awareness activities that must happen, engagements with different parties, with investors, with different stakeholders, including the shareholders associations and other people within the ecosystem, the regulators. Then during the IPO, there are a whole lot of processes that will happen. And today we have digital IPOs. So investors are expected and allowed to apply for offers from the comfort of their homes using their phones or their laptops or their system, whatever. Then after IPO, there is management that will happen. Of course, when you have subscribed to an offer, you want to know the outcome at the end of the day. You want to see your shares in your trading account. You should be able to trade as soon as the allotment has been concluded and everybody is smiling. So there are a lot of activities that happen at this instance. We'll be looking briefly on why do IPOs fail. IPOs fail when there is weak governance, when there is poor timing, when investor communication is weak. If investors don't know what you plan to do, they will not subscribe to your offer. If the company is overvalued, you now come to the market and sell the company shares at 1,000 naira, and tomorrow it goes down to 100 naira. The investors will not be happy because they've actually lost money. When there is poor control, IPO will fail. And then weak post-listing strategy, investors will be unhappy when there are no proper strategy, because when you come to the market, you are raising funds. And you've told the investors what you want to use this fund for. Investors expect you to apply these funds according to what you've gotten approval for. And then they will help you and support and see that the business is growing. But when these things are not in place, the IPO is bound to fail. Now, for the CEO that might be thinking of going through an IPO, there are questions that you should ask. Is your governance IPO ready? Can we withstand public scrutiny? Can the company withstand public scrutiny? Can our system scale? Can investors trust our disclosures? Are we telling them everything about the business? Do we have the right advisors? So as an entity, you must ensure that when you want to choose advisors, you choose professionals. Don't just pick any man on the street to come and give you advice, because it can work against you. Looking at IPO future, the future of IPO in Nigeria, our offerings today are digital and will continue to improve. Fintechs are playing in this market. They have become critical stakeholders in our markets. You must look at the environmental, the social, and governance, ESG. Very important. How are you treating the environment? How is this social engagement like? And what does your governance look like? AI has come to stay. If you must remain in business, if you must play in our market, you must be AI ready. Retail investors are here. We have to democratize investing. And then there is cross-border investments. People from outside the country are investing in our market, and they must have the benefits of their investment as if they are in Nigeria. So as I round up, I'll speak about our key takeaways. Going public is a transformation. It is a journey that every company would desire to undertake. Governance creates value. Governance does not mean that now you are opening everything, everybody will see you. It creates value because people will help you know your weak areas so that you can work on it. People will advise you on what you need to do. Your investors will advise you. That is why when you go to annual general meetings, you see investors making their comments. Shareholders will tell companies, why don't you do this? Why don't you do that? And very often, they even offer to support the companies So it's good to come to the market and be a public company. Technology enables trust. Technology does not take away your business. Technology helps you to be efficient. Technology brings scalability to what you do. Technology allows the human beings to do critical thinking while the technology handle operational activities. So we must ensure that we use technology. And then preparation determines success. When you see a successful offer, you must know that a lot has gone underground. A lot of activities by all the parties, a lot of meetings, a lot of engagements, a lot of dotting the I's and crossing the T's have been done. As I conclude, I want to remind us that the most successful IPO are not built in the months before listing. They are built over years of disciplined leadership, strong governance, operational excellence, and unwavering commitment to creating sustainable, lasting value. Thank you so much for listening.
Thank you so much, Ms. Catherine Woso. Thank you for that keynote. I mean, it just goes to show that IPO is not just about selling shares to the public, that it goes beyond that. So to continue this panel session, I would like to introduce our panelists. And because of time, we'll just read a brief profile of our panelists. So I'm starting with Dr. Gbadebo Aderele. He's the Managing Director investment banking at United Capital PLC. With over 2 decades of investment banking experience, he has advised leading corporates, governments, and financial institutions across Africa on capital raising, mergers and acquisitions, project finance, and strategic transactions. He currently serves as the Vice President of the Association of Issuing House of Nigeria. Please welcome Dr. Gbadebo Aderele. You're highly welcome, sir. So I will move into Mr. Oladiroduro Emmanuel, who is the Relationship Manager, Primary Markets at the Nigerian Exchange Limited. He plays a key role in issuer organization and capital market development and has contributed to several landmarks listing on the NGX, including Aradel Holdings, Transcorp Power, and VFD Group. Please join me in welcoming Mr. Oladiroduro Emmanuel. So I'm moving over to Mr. Henry Machame, who is the managing partner of Machame Ratios in Canada and Nigeria. He is a respected capital market researcher whose equity and bond research database has been cited in over 1,000 academic publications and supports investment professionals and researchers across Africa. Please welcome Mr. Henry Machame. So last but not the least, we have Bukola James Cole, who is the Director of Capital Market Business at Africa Prudential PLC. With over 20 years of experience in registrar services, securities trading, and capital market transactions, she has led several landmark transactions, including the listing of Airtel Africa PLC and MTN Nigeria PLC. She's also a respected governance professional and a strong advocate for financial literacy and inclusion. Please join me in welcoming Mrs. Bukola James Cole. So having introduced our panelists, we'll dive straight into the panel session for today. So the very first question I'll be asking is going to be a general question to our panelists, just to hear their views and thoughts on this question. So I'll go ahead. What is the single biggest misconception Nigerian businesses have about going public? So I'm throwing the question first to Mr. Oladiroduro Emmanuel. Please, let's hear your view.
Good afternoon, everyone. Thank you for having me on this panel. Thank you, Gabe, for the question as well. So there are quite a number of misconceptions regarding listings on the exchange, and I'll just list a couple of them. Most entrepreneurs believe listing on the exchange requires them to surrender control of their company, and also it leads to share dilution. But the truth of the matter is that founders can still retain significant influence through their ownership structure, through board representation, and through adequate corporate governance mechanisms. Another concern that is quite evidently portrayed by entrepreneurs is also the transparency and reporting obligations that come with the listing process. Some of them may find it burdensome, but these processes are put in place so that they can ensure that there's credibility, strengthen investor confidence, and also support long-term growth rather than diminish control by these investors. Another key view or opinion entrepreneurs also have is that they perceive listing costs and corporate governance requirements as being too expensive for them. Another worry is that the market may not be able to value their business properly. And finally, they also have concerns around liquidity and depth of the market. However, if I'll just quickly speak to that, with the recent banking recapitalization exercise that happened, where the banks utilized the capital markets to recapitalize, over 4.65 trillion was raised through the capital market, which clearly demonstrates there is depth and liquidity in our market. So in conclusion, I would say that going public does offer benefits that extend beyond capital raising. I mean, the MD has already highlighted some of those points in her presentation. By listing a company, you're able to create transparency, create a culture of organization. Also, more importantly, you're also able to transfer generational wealth across future generations. So I believe that some of these misconceptions are largely due to financial literacy by entrepreneurs, but this is why we have sessions like this to educate the public on why listing is a good option. Thank you.
Thank you so much. So, Mr. Badibo, would like to hear your own view.
Okay, thank you very much. Thank you for inviting me here. I think Mr. Drew Emmanuel has covered quite a bit of the misconceptions, but I think one other one is the fact that a number of companies think that only large companies can go public. Again, the exchange has sections, a good board, a main market, a premium board, and that caters to a wide range of companies, from the mid-sized companies to the larger companies, and to the very large companies, or the premium companies, as you may call them. That just to say that a number of companies, and we've seen a number of mid-sized companies also access the market and get public. The other misconception, if you ask, that I would think is going public. Generally, everybody thinks there's a misunderstanding of just going public. Going public can be viewed in two ways. You can either be public via a listing by introduction, where you just be a listed company. You're not accessing the capital from the market at that time, but you are listing your shares on the bourse, on the Nigerian exchange or any other bourse as well. But that's a listing by introduction. That way, you're only achieving a listing. There's also the IPO proper, of which you're now raising capital at the same time you're listing, and then you're raising capital from the market. In both instances, you achieve the going public initiative. However, with an IPO, you're able to access capital from the market immediately. With a listing, you list your share, you list your company immediately, and then subsequently you can do an IPO and subsequent capital raises. I think that just adds to what has been put on the table in terms of misconceptions. The other point would be, the last point that comes to mind would be around IP. A number of issuers would think that an IPO is an exit, or a number of founders who may consider an IPO as an exit. Again, as the founders of those companies, as key shareholders in those companies, and then some of the guidance we also have some lockup mechanisms as well that apply to some of the founders or to some of the key stakeholders. But generally speaking, that shouldn't be viewed as such, because most times when companies come to the market, again, whilst the founders will sell a good part of their shares, they still retain a good part of it, and value is still created, because as new investors come in, as monies are flowing to the companies grow bigger, and then those stakes that are left, actually they are worth a lot more subsequently. I think those are the only misconceptions I think I should add to what Mr. Drew Emmanuel has already fielded. Thank you.
All right, thank you so much. So Bukola James Cole.
Okay, thank you. Once again, good afternoon, everybody, and thanks for having me on this platform. So I think the first thing I would say, a lot has been mentioned. Number one will probably be market volatility. So today, I mean, we all know that listed companies are driven by information and several other things. So a lot of people are really scared that there can be a negative influence on their prices, forgetting that as Mrs. Catherine has earlier mentioned, there's the role of corporate governance, there's the role of adequate planning, which will help you posture your company in such a way that it's not affected by any form of negative information. Another thing is disclosure of sensitive information. The keynote speaker also to an extent covered that. So a lot of people want to be able to do things internally, and by the time you become publicly listed and then there's no private information, you now have to start making disclosures, particularly, in fact, timely disclosures. Some are monthly, some are biannually, some are even quarterly. And then finally, from my end, there's also the risk of hostile takeover. Some people think that the wrong people will take over their companies and all that. Meanwhile, when you come public, there's a reason for coming public, and then you can still have a majority of your equities shareholding. So those are the misconceptions. But really, when you have a proper governance and all those things in place, then you'll be able to manage a public listing. Thank you very much.
All right, thank you so much for clearing out those misconceptions. So our listeners will get to know that it's not always what it seems. So I think we'll move into the panel session proper, where I get to ask questions individually. So since Bukola James Go was the last speaker, I think the first question I have will be directed to Mr. Oladiron. So let me read here. So what are the key services, innovations, and support mechanisms provided by the Nigerian exchange to simplify companies preparing for an IPO?
Thank you for that question. So we at the exchange, we have introduced a range of services, innovations, and support mechanisms designed to make the IPO process more efficient, more accessible.
Sorry, Mr. Oladiron, are you there? Oh, it seems we must have lost him. Let me just move over to the next speaker. We'll come back to him. So I think the next question I have will be for Bukola James Cole one more time. So the question I have here is, how important is investor confidence in sustaining a vibrant IPO market?
Thank you once again. So investor confidence, I will tell you, is the cornerstone of a vibrant market. So in this case, I would term it as the cornerstone of a sustainable IPO market, right? A lot of investors are willing to commit money, capital, when they are sure or they are assured that the market operates with trust, transparency, fairness, strong corporate governance. Again, corporate governance keeps repeating itself. Confidence that is built through timely and accurate disclosure. So a lot of times when you're coming public, you don't hide any form of information. You must be able to display and inform the public on time, not them finding out at the end of the day or back behind or from people who are just speaking stories. Once you have an efficient market infrastructure, regulatory oversight, which we have with the NGX and the SEC today, and then a seamless investor experience, we will be assured of a trusted investor coming to the market. Even beyond attracting new investors, a lot of times confidence encourages long-term participation. You see today that a lot of listed companies have liquidity because there are some companies that enjoy participation of a lot of shareholders, and that's because of the trust that they have built in their industry. When you have improved market liquidity, you have companies to raise capital, particularly when they have fair valuations. As our market evolves over the last couple years, we've had evolution in the market. The way we have participants in the market today is very different from what we experienced about 5 years ago. And that's because, to an extent, the regulators have found a way of instituting confidence, in the market. And that's why Duro was talking about some directives and some implementations they put in place so that the confidence of the investor is put first. And that way investors are able to participate in the market without any scare of a market crash or any scare of losing their money in entirety. Because before a company starts exhibiting traces of losing funds, you will see that the regulator has taken a stance. About 2 months ago, I also remember that there was a company that was placed on suspension because they couldn't really define how the prices were moving. So there's a lot of regulation and a lot of intervention that the regulators have come up with to ensure that the investors' confidence is sustained. And once that is done, we will probably have a large participation of investors coming for public offering.
Thank you so much, Bukola James Go. So I think I'll be moving back to Mr. Oladiron. I don't know if he can hear me now. Sir, can you hear me now? I think he's still off. Okay, so I'll move over to asking Mr. Badibo his question. So from an investment perspective, what distinguishes IPO-ready companies from those that are not ready?
Okay, thank you very much. I think what is key in the corporate environment is trust. A lot of what has been said by all the speakers, the keynote speakers, and my other panelists revolve around trust, right? But again, for every company, for the companies that you want to see, a lot of private companies seeking to come out to the market, they need to be prepared, right? There's a decent amount of preparation that is required to be able to go public. I think the keynote speaker spoke about this, right? But what distinguishes them is their operating system. What kind of behavior does that institution, and of course, the institution is made up of people, right? The systems they put in place and the people. And those are the real distinguishing factors, right? It cuts across a number of things. So one is, and perhaps all are important, right? Growth strategy. And what you generally call, in different ways, people say the equity story, right? What's the equity story of this company? What's the future story? What's the growth that they are trying to portray, right? The keynote speaker spoke about the fact that investors want to be able to see where this growth is coming from because they're keying in now, and they want to key in based on the fact that the outlook for the company is very bright, right? They also want to have a sense around the historical performance. Right? How have we been doing? How have we been performing historically? Are your financials audited? What kind of disclosures have you made? What kind of earnings has the company made in the past? Of course, past performance is not a predictor of future performance, but it gives a sense around how the company has been run in the past, and we expect that even better levels of management will kick in as they become public or as they join the stage of public companies, especially with all the requirements from the regulators and all of that. But quality of earnings, the financial performance, the equity story, there's some of the things that they want to see from this company. They also want to have a sense around the corporate governance, right? Underlying a lot is corporate governance. The keynote speaker really touched on that, and that's there's a direct correlation between corporate governance and value creation. There have been assessments of this, literature on this, practical evidence around this all over the world. As you improve corporate governance, robust corporate governance always delivers value. Of course, underlying all of this, or in addition to all of this, is the quality of the team, the quality of the board members, the quality of the management team. Those are also very critical and very important. Investors want to also see all of this. Lastly, and more recently, we see this gain a lot of mileage is high standards around ESG and sustainability. This is very important, and it's important. So at the end of the day, what you see is that the defining factor is what investors can see across all this, some of these things I mentioned. At the end of the day, is really for you to ensure you inspire investor confidence, not in a very transparent and traceable and evidence-based format. I think that should address that.
All right, thank you so much, Mr. Badibo. So we also have Mr. Henry Machami on this call. Sir, are you here?
Yes, I can hear you. Can you hear me?
Oh, I can hear you. Thank you for joining us. Okay, so I'll be taking your question now. Can I go ahead?
Go ahead, please.
Okay. So beyond raising capital, what strategic advantages does a public listing offer businesses?
So thank you. I think I will just follow the discussions of other speakers, other panelists. I think some of the key benefits of having your company listed would be best practice. There are some specific requirements a company that is listed is expected to meet. One of them would be in terms of reporting. The moment a company is listed, such a company is expected to not just implement IFRS as an accounting reporting system, but also improve transparency in terms of how their financials are presented, which will give investors more confidence, which would improve their internal process. Another advantage of listing would also be in the area of improving a company's ESG, because if we look at the ESG framework, apart from just implementing it, it is also going to give such a company the opportunity to become attractive to foreign investors, and also put systems that would help the organization become more sustainable. Again, when a company is also listed, other benefit that it will also have, from what we see, would also come in the form of visibility globally. Because one of the things we realize here is that most foreign investors, when they want to invest, they have a framework of how they invest. For example, some company will want to invest in, let's say, a company that is halal driven, for example, or ESG driven, or dividend or value or growth driven. This is once a company is listed, such a company become attractive to these global investors. So I think then lastly, we also believe that once a company is also listed, the other values that they will also realize from such a listing would be being able to also find themselves in a situation where they can work with other foreign partners, because listing gives you visibility. For example, most of the big agricultural companies in Nigeria, they might not be well known, but the few ones we are aware of, we are aware of them because they are listed. For example, you could see the mileage that Zichi, people, livestock. These are companies that are smaller in the agricultural space, but because they are listed, they tend to enjoy that international visibility. So those are some of the few benefits a listing company would enjoy. Thank you.
Thank you so much, Mr. Henry. So, Mr. Oladiran, are you back? Oh, I guess he's not
Yes,
here
I
still.
am.
Oh,
Yes,
okay.
I am. I'm
All
here,
right,
Gift.
all right. So maybe
Yes,
I'll
sorry
have to
about.
read your question. I'll read your question again. Can I?
Please go ahead. Please go
Okay.
ahead.
All right. So, what are the key services, innovations, and support mechanisms provided by the Nigerian exchange to simplify companies preparing for an IPO?
Okay. Thank you very much for that question. Apologies once again for the break in transmission. Like I was saying before, I was dropped off the call. At the Nigerian Exchange, we have introduced a range of services, innovations, and support mechanisms which are designed to help make the IPO process more efficient, accessible, and also attractive for companies that are seeking long-term capital. One of the first things we realized at the exchange is that technology is the way forward. So we have leveraged technology to develop the NGX Invest digital platform. This platform is a SEC-approved digital platform that enables public offerings and rights issues to be conducted electronically. It has helped simplify the subscription process. It has also helped reduce paperwork and improved efficiency and compliance, and also broaden access to investors, more particularly among the younger generation who are more tech savvy and are looking for ways to be part of the capital market. And digital access is one of these ways that we have provided access for them, right? In line with this, just to mention, domestic participation levels have also increased. We have about 2.6 million retail investors up from about 1.6 million in 2023. Year to date, we've also done over $3 billion in transactions that have been carried out on the exchange. All of this has been achievable through the use of technology to achieve this. So there are a couple of other things we also do. As you all very well know, we have also recently introduced the T+1 settlement cycle. We recently migrated to a T+1 settlement cycle, which has enhanced market efficiency by ensuring faster settlement of securities and transactions, also improving liquidity and reducing counterparty risk. This has also provided greater confidence for both our issuers and all our investors in the capital market. We also have an advisory and service, which the primary market, which I am part of, which we provide to prospective issuers who are looking to list on the exchange. So all the listings that you see that happen on the exchange, the primary market team is responsible for that. We work closely with prospective issuers, regulatory authorities, registrars, stockbrokers, legal advisors, all the ecosystem that the MD mentioned in her presentation. We provide those advisory services, thereby explaining what are the listing requirements to investors, what are the corporate governance requirements for investors, the documents to be submitted, and generally handhold the prospective issuer through that listing process from start to finish. Also at the exchange, we also have an ex-issuer portal, which is handled by our regulatory arm, the Nigerian regulatory company, that is responsible for digital access for issuers to submit their disclosures on the exchange, which is a requirement of the exchange. So it has made access to documents, financials by issuers easier to access by investors and the investing public. We also have our X Academy, which provides capacity building programs. We also offer corporate governance training and financial literacy initiatives that help prospective and listed companies prepare for the listing process. So we give trainings on corporate board governance, and we can design this to fit. It's company specific. These programs can be designed to fit companies specific to their needs as they may need. We also have strategic partnerships and capacity buildings. So we have collaborations with different institutions, one of which is the Bank of Industry. We have a memorandum of understanding with the Bank of Industry, and currently we have done about 2 financial literacy programs for SMEs and MNSMEs in Nigeria. The aim of this is generally just to create financial awareness about the capital market, the options, the listing pathways, the requirements, and also to prepare these companies for accessing the capital market. So this initiative will have helped demystify the IPO process, as the case may be. Also address some of these misconceptions which we have previously mentioned around disclosure, loss of controls, and also to equip companies with the knowledge and capacity that is required to successfully access the public markets. Finally, we also have our market visibility programs and platform. We have what we call the Facts Behind the Figures platform, whereby corporate issuers come to the market. They speak about their audited financial statements, and tell the public, the brokers, the investing public, what their plans for capital development are and where the company sees itself going. Like has been mentioned earlier, information is the key thing in the capital market. The more information you give people, the better they are able to access your company, make investment decisions based on sound, available information to make their investment decisions. So, finally, I think listing on the XGX is more than a capital raising exercise. It helps provide access to long-term funding. It improves corporate visibility. It strengthens governance, broadens your investor reach, and also it creates a transparent ownership structure that supports business continuity and generational wealth creation. Thank you.
Thank you so much, Mr. Olajuwon. So it goes to show that NGX is really doing a lot to, simplify companies preparing for IPO. And this panel session is also, it's giving a lot of insight. So it's not just about companies waking up one morning to just, list on the public exchange. It goes beyond that. Companies have to prepare for this. They must have proper structure. They must be ready to be scrutinized by regulators, and it's beautiful. So we would go further to asking more questions. So the next question I have here is for Ms. Bukola James Cole. And it reads here, what trends are shaping Nigerians' capital market today? And what policy reforms or market innovations are likely to stimulate more IPO activity?
Okay, that's for Bukola James School. Thank you. Okay, so today, technology. I will just start with technology. So today, the way and manner that public offers are being run is now, we now use the likes of technology. Again, Oladiran mentioned that the Nigerian Exchange Group already has a technology, but as registrars, for us, an IPO is not just a capital raising exercise. It actually marks the beginning of a long-term relationship between both the registrars and the issuer, and also the investing public who are now going to take part in the IPO. The journey for the registrars and the investors is quite a long one, because for managing our investors, we as registrars, we manage the onboarding process when it comes to the allotment, particularly after the approval at the SEC. We also maintain the register records. We ensure that the register records are accurately managed. We facilitate dividend payments, dividend distributions, interest, depending on the type of transaction. We also support corporate actions a lot of times for every publicly listed thing. At every year, every company must have an annual general meeting where they come and discuss how well the company has been run. We facilitate that. We ensure regulatory compliance. I mean, we cannot be managing the records of an issuer and not report timely to regulators, to the issuers, and even to the public because they are publicly listed. We enhance shareholder communication because we manage the register base. We are the ones that ensure that we inform the shareholders and the investors of what's happening time on the company. We actually play a vital role in delivering an exceptional investor experience. A lot of times, it's advisable that companies should engage their registrars very early on the IPO stage, particularly because that relationship is long-lasting. And once that engagement is done early on, the issuer now tends to benefit from stronger operational readiness because we would have met and discussed what would like the investors to experience, how digital we want this today. In the world of today, everything is done online. We would have put all those things in place, and then we'll have a smoother execution and a more seamless transition to the life of a listed company. Ultimately, an experienced registrar would help investors build trust, would support good corporate governance, would contribute sustained investor confidence, and ensure key ingredients for long-term success in the capital is maintained and kept at all times. Because we're also the back end to manage the register base of shareholders, for every time there's a directive or any information or any trend happening in the industry, the registrars would always communicate to both the issuer and the investors. Thank you.
Thank you so much, Ms. Bukola James Cole. Okay, so my next question is going to Mr. Oladiran. Sir, can I go ahead?
Yes, please. Please do.
Okay. So in today's economic environment, is an IPO the right growth strategy for every business? Or are there circumstances where remaining private is the better option?
Okay. So an IPO can be a powerful growth strategy for many businesses, but ideally, the most suitable capital raising path usually depends on a company's stage of development, what their strategic priorities are, what their funding requirements are, and their level of corporate readiness, right? As businesses, as they evolve, they may choose to finance from a range of different financing options, which may include private capital, strategic partnerships, or debt financing, or a public listing via an IPO, right? And each of these mechanisms serve different objectives at different phases of growth for each of these companies, right? So for companies that have achieved or reached the appropriate level of scale and maturity, going public can help unlock long-term capital for them. It can also help enhance their market visibility, help strengthen governance, and create value for their shareholders. But however, there are also circumstances whereby remaining private might be a better option. Like I said, it depends on the stage of maturity of the company. So for some companies that have sufficiently internally generated cash flows, requiring an IPO or going public might not necessarily be the best route for them. Also, there are also companies that are not yet ready for the rigors of the governance, the reporting structure, and disclosure requirements that are associated with being listed publicly. They may not necessarily benefit from going public, and they may choose to remain private. However, it is pertinent to note that for companies that are looking to scale and grow their business and have strategic objectives and see themselves becoming the next big thing in the Nigerian economy, the IPO, going public, is the way forward for them. So at the Nigerian exchange, we have recognized that businesses operate at different stages and levels of development, right? So we at the exchange, being a multi-traded asset exchange, we offer multiple listing platforms that are tailored to these levels of maturity. Dr. Badibo had mentioned this earlier when he was speaking, when he said that we had the different boards, the main board, the premium board, and our growth board. So I'll just quickly touch on those to just provide a little bit of insight on how we have addressed this issue of maturity, of mature companies accessing the capital markets. So the exchange, we have the premium board, which is for large corporates that possess the highest levels of corporate standards. And these companies have a minimum market capitalization of over 200 billion, right? Our next board is our main board. Now, our main board hosts the majority of the 146 listed companies on the exchange. This board caters to mature businesses that have market capitalizations between 4 billion and 200 billion, right? And also to cater for the SMEs and SMMEs, we have our growth board. We have the growth board it provides a more accessible pathway for companies that are looking to list on the exchange. The rules and requirements to list on the growth board are much more relaxed than that of the main board or the premium board. For instance, the minimum capitalization for a company looking to list on the growth board is between 50 million to 500 million. Also, some of the rules that are necessary for them to list on the growth board, such as the free float, is about 10%, an operating track record of 2 years, with a core investor who also has an operating track record of 2 years is also applicable on the growth board. It is also quite important to note that an IPO is not the only route to accessing the market. Dr. Badibo also touched on this when he mentioned the listing by introduction. The listing by introduction is a process whereby companies come to the market, list their shares, but there is no initial capital raise that is undertaken by these companies. The major aim of an LBI is for price discovery, and this allows their shares to be listed, and thereby they can have price discovery. It helps improve visibility for companies, and it also helps establish market value. Now, following this listing, subsequently, they may decide to also have some capital raise, either through listing of bonds or commercial papers or other debt instruments such as sustainable bonds, before eventually undertaking an IPO when the timing is right. As has been mentioned on this panelist session as well, the IPO process is not just a one-off. It's a long process. It's an end-to-end long process that involves different stages for companies to pass through at different points in time, right? I'll just quickly give an example of a successful LBI that has happened. Mikio Industries, a health and pharmaceutical company, they listed on the exchange in 2023. They listed by introduction. And when they listed, their share price was about 2.96 naira. Presently, that company's share price is trading at about 85 naira. Their market cap when they listed was 11.84 billion. Right now, their market cap is about 341.8 billion. So you can see that within the space of 2 or 3 years that they listed, they have been able to, one, have price discovery. Their share price has moved from 2 naira to about 85 naira now. Their market value has increased substantially from 11.84 billion to 341 billion right about now. And so this is just highlighting the fact that the process of going public, there are different pathways that can lead to eventual success. And it's not just a one rule that fits all for everybody. So also at the exchange, we are also continuously reviewing our listing requirements to ensure that they remain aligned with international best practices as well. In conclusion, I would just say that, I mean, the question about whether a company should go public or remain private, it depends on their strategic objectives. It depends on where they're at in terms of their level of maturity, in terms of growth. It depends on also what they aim to achieve, what value are they trying to pass across to their shareholders. So really, it's taken on a case by case basis. But finally, I would say that, you know, for people that are looking to scale properly and grow their business, an IPO is a desired pathway for them. Thank you.
Thank you so much, Mr. Oladurum. So because of our time, we'll quickly run through the next question so we can give our audience room to ask their questions as well. So I'll be asking this question to Dr. Badiwo. So from the investment banking point of view, what trends are shaping Nigeria's capital market today? And what policy reforms or market innovations are likely to, stimulate more IPO activity?
Okay, thank you very much. And I think I would answer that question broadly, not just only from investment banking perspective. I think the capital market is already witnessing a revolution of sorts. Some of the speakers, some of my colleagues on the panel have spoken to this, but I think technology is democratizing access to the capital markets. So essentially, I'm speaking about digitalization. Investors are able to access the capital markets, web and mobile-based platforms and apps, both institutional and HNIs and retail investors are able to access these capital markets through technology. I think that's one major one. And technology continues to go with AI, with a lot of things. Also, we have a situation where we also have regulators also taking the right steps to ensure that they're also ahead of the curve, or they're not too far behind the market in terms of technological developments there. Another thing that is key for us to look at is the infrastructure development, right? Again, recently settlement processes moved from T2, T+1 to T+2 actually to T+1 now. And again, that's a very big development progress as it is. Trading time has moved from now moved to 9 a.m. to 12 p.m. Again, the trading system also improves. A lot of stakeholder engagements platforms are also improving this. Again, we step back again and look at the regulations or the acts or the underlying laws that regulate the environment. We had reviews of CAMA. We also had Investment and Securities Act, which is actually the primary regulation that underlies what we do in the investment space, right? Then also, there are a few things have also happened. The NGX has also evolved on its own, post demutualization with a lot of reforms from the NGX as well. We've seen SEC, Securities and Exchange Commission, the NGX, FMDQ, a number of these key market players focus on market development. And, a lot of alignment with ensuring that we can develop the market and go towards the $1 trillion market plan or market objective of the government. Again, broadly speaking, you also look at from the investor side, like domestic and foreign investors there's increased participation in issuances in the market. You see a lot of pension funds, even regulations around pension funds, a lot of changes happening in line with market development. I think those are also positive. We've seen a lot of FPIs, foreign portfolio investments in the country, and a lot of diaspora interest also in opportunities in the Nigerian capital market, at least in this period. With all of this, we've also seen, and we've talked about this, ESG and sustainability disclosure has become a bit more, has become more central, and that's also one of those things that will include increase interest from our foreign investors. I must say there's a point to raise, and more recently this week, you can see a number of global index providers. That's FTSE Russell and S&P DJI, Dojo Index, right? You see that the clamor, the direction towards getting Nigeria back into the frontier market classification is we're moving in that direction. We expected we would have gotten there. Maybe slight delays, but we expect that in the near future we should be able to get back into that classification where we will be reclassified again as a frontier market rather than standalone where we are now, and that would ensure a lot more global funds are able to look at Nigeria and complement the investments that we're getting from the domestic funds and the investments that we have from Nigerians and investments on ground. I think those are some of the trends I see. I think just to add quickly, and I know we're wrapping up, as companies seek to look at IPOs, I think the keynote speaker spoke to this. Preparation is key. Some companies will start preparing 3 years before, 4 years before, and nothing says you can't start 2 years or a year before, right? But preparation is the watchword. There's an ecosystem of advisors that you're working with. I work for an investment banking firm, and investment bankers are normally at the center of preparation, of holding the hands of these companies in that preparation process, right? And we've done a lot in this space. In 2024, we listed Transcorp Power 1.8 trillion on Nigerian exchange. A lot of other subsequent to that, you saw a number of other big listings take place on Nigerian exchange as well. But we note that the last proper IPO in the Nigerian market has been a while back, almost like 5 years back, right? But again, we expect that the market is showing signs of readiness for IPOs again, and we expect that with the interest that we've seen from domestic and international investors, that will play out very soon. I think I'll pause here. I know you're running out of time, and then we'll take it from there. Thank you.
Thank you so much. Okay, so we'll be having our final question, and this is for Mr. Henry. Mr. Henry, are you there?
Yes, I can hear you. Go ahead, please.
Okay. So what should companies start doing today if they aspire to become listed entities in the future?
Okay, so I think one of the first thing, like just to continue from where Dr. Badebo stopped, there's so many technicalities around preparing for an IPO. But I think one of the strongest advice we give to companies is just work with an issuing house or an investment a bank, because they are in a better position to discuss with you at the more senior level to understand some of the reasons why you want to be on the exchange, and also structure the listing in such a way that it will be of best interest to the not only to the founders but also to the new shareholders that will be coming after the IPO. So I think after that, we would also recommend that a reporting accountant is involved, because one of the things we also see is that accounting issue is one of the biggest issues when companies are trying to go public. Then probably a third would be to get someone, because of the sensitivity of ESG today, it's also to get an expert in that space that will be able to not only focus on governance, because environment is also becoming a big issue when you are also trying to get your listing done, then the social aspect also. So I think those are the 3 big pillars. I think if you have those 3 people in your as your support engine, getting the listing will be something that will be easier. So get your issuing house maybe as the first point to advise and put you on that roadmap. Then get your reporting accountant to be able to check your books and be sure that you are ready and you are IFRS compliant and all those transitions internally are also done. Then finally get somebody that is an expert company that can also help you to handhold you on the ESG aspects. I think those are my 3 points. I believe that these 3 people would be able to take care of all the technicalities around what we have been discussing as panelists today.
Thank you so much, Mr. Henry. So we have questions from our listeners, and then there's a specific question for Mrs. Catherine also. Mrs. Catherine, are you here?
Yes, I'm here.
Okay, there's a question for you from one of our listeners. So can I read now?
Please go ahead.
Okay, so the question reads, what role does ICMR play after a company has gone public?
Okay, ICMR is a professional body for all registrars. So ICMR does not directly play a role in IPO, but ICMR oversees the activities of all the registrars in Nigeria. Thank you.
Thank you, Ma. So we have another question that is directed to Dr. Badiwo. So it reads, at what point should a company transition its accounting and financial reporting systems to meet public standards before the actual filing?
Okay, I think as a private company, you should start keeping your books in the proper way. So get a good auditor to help with, first of all, have a proper finance team, and also have an external auditor, a good, and we normally advise companies, of course, at the end of the day, we have different cadres of auditors, right? You have the big four, then you have the next group before the big four. As long as you are keeping your books properly, an external auditor is reporting properly, and you have the audited account, your financial statement properly audited. Again, once investors or any regulator is able to go through your books, I think you tick the boxes. But the question is at what time? The time is now. Start keeping your books properly now. Then you can now start saying, can you start changing to maybe from a mid-sized auditor, a smaller auditor, to a bigger auditor, then or a more renowned auditor? Then that's something you can do later on. But start keeping your books properly right now. I think that's the answer.
Oh, okay. Thank you so much. So because of our time, I'll take two more questions. So I'll read one of them, and this is directed to Mr. Oladiron. And it says, with recent NGX listing, what has investors' appetite looked like? Are Nigerian retail and institutional investors actually absorbing new issues?
Okay, thank you for that question. So yes, like I mentioned earlier on, retail participation in the capital market has increased substantially. Circa from 2023, we had about 1.6 million retail investors overall. Right now, that figure has gone up to 2.6 million, right? So that has shown that there has been increased interest in the capital markets. And also, this has also been fueled majorly by the technological advances that we have had through access to the capital market through your phones, through apps where investors can make investment decisions quickly. And also, this has also been fueled by the recent transitions from T+2 to T+1, right? So all these initiatives have helped increase the appetite for retail, for investment in Nigeria by retail investors. Thank you.
All right. Thank you, Mr. Oladiron. So the final question from one of our listeners is, how do you register for an IPO? And this question is not directed to anybody per se, so any of the speakers can do justice to this.
Maybe I should just go there. So how do you register for an IPO? I think first is the core of this seminar, this webinar, realities before going public, right? IPO readiness, business realities before going public is essentially you getting an advisor, the core advisor, or the two core advisors you really need, right? Your investment banker, which is your issuing house, and then your lawyer, right? To just do a number of housekeeping to get you ready. Essentially, your financial advisor or issuing house, which is the kind of work United Capital does. We've done this. We've been doing this for 60 years. We've been in business for about 6 decades now. But again, more importantly, is the fact that we help companies, different companies of different sizes, to assess where they are now and guide them in the process of accessing the public or going public. The real work that, like Mr. Duro Emmanuel mentioned, the Nigerian exchange has a number of requirements, listing requirements, right? In the process of working with you, ourselves, and it could also be any other advisor, right? But your financial advisor will essentially work with you to see where are you now, what are your growth plans, and walk you through, support you in ensuring that you can achieve or putting up a plan to be able to achieve listing. Is really the whole gamut of the IPO readiness. If you remember I think there was a slide that Ms. Catherine also put on the that shared around the ecosystem around IPO readiness. There are a lot of advisors that will work with you, but you start with the core advisors, and then we'll bring up the others, and then we'll touch all the key things from governance to financial reporting to sustainability, all the key things that you need, and then you would now be in a position to meet the requirements of the NGX, subject to whether it's the growth board, the main board, or the premium board. Thank you.
Thank you so much. So in 30 seconds, we'd like to hear final words from our panelists so we can wrap up this session today. So we can start with Ms. Bukola James Cole. What are your final words in just 30 seconds because of our time, please?
Okay, thank you once again. I'll just say that coming public is something that should excite issuers. Picking your parties very well ahead so that you can start a relationship from the issuer, picking the advisor, picking the registrar, your lawyer, and having a good relationship such that they help position you ahead. And that's where you avoid any form of stumbling block, and then you would reap all that is required in an IPO potentially. Thank you.
Okay, Mr. Vadibu, please, your final words.
Okay, I think a lot has been said, but early preparation is what is key. Early preparation is what is key, and it takes a universe of advisors to work with you. But starting early and getting it right is what is key. I think at the end of the day, the journey to becoming public is always a worthy one. You see the data from the NGX regarding value creation, but getting started early and putting all the things in place, governance, financial reporting, sustainability, and all the likes. And it's a very viable and profitable journey. Thank you very much.
Thank you so much. So, Mr. Oladiron.
Okay, thank you. I think as has been mentioned already, the IPO process is one that companies should consider, and we at the exchange are always willing and ready to help companies on this process. What an IPO does, or going public does, is it ensures there is continuity. It ensures that there is good corporate governance. It also ensures that there is a transfer of generational wealth for founders of businesses who can see their business outlasted. So I would say that to the businesses in the Nigerian economy, you guys should come over to the NGX and list your companies. Thank you.
Okay, so Mr. Henry.
Okay, so I think on the final note, from the information we've gathered so far on the Nigerian economy and the markets, we believe that for any companies that can successfully find their way into NGS, they should worry less about subscription of those for their shares, because with the reform that is going on now, there's so much money that's going to be coming out from the CMOs, from the capital market operators, because most capital market operators, they are expected to invest some part of their money in the market, the banking reform, the insurance reform. So there will be a lot of money for institutions to invest in the market, even before we start going outside the shores of Nigeria. So I think on this note, I want to say that for those that will start the journey, it is timely if you can get it done as quickly as possible, because there's a lot of money that institutional investors wants to deploy into the Nigerian market. Thank you.
Thank you. Then finally, our MD, Ms. Kachuwoso, your final notes, please.
All right, thank you very much. And I'm looking at one question that someone asked, and the person said, how much revenue do you need to have before you can be ready for IPO? I want to say that it is not about the money you have today. People are looking at the potential. People are looking at the future of your business. That is what they want to invest in, the future that they anticipate will come to pass. That is why people want to invest in your company. And as I said earlier, the successful IPOs are not built in the months before listing. They are built over years of disciplined leadership, strong governance, operational excellence, and unwavering commitment to creating sustainable value. People are watching you as you do your business. They want to know how transparent in what you're doing. They want to know how the kind of integrity that your business has. They want to know how your employees are being treated. They want to know how sustainable the business you are doing will be. They want to know which value are you creating. When you have a business, ensure you are solving a problem. And as you're solving that problem, continue to anticipate the better ways of serving your customers. People will be happy, no matter the size of your revenue. Once you have 3 to 5 years financial standing, audited statement that will show that this company has prospect, and they look at the future of your company, you can approach the financial advisors and they will help you package your IPO, and then you can come to the market. Thank you very much.
Thank you so much. So on behalf of Africa Prudential PLC, thank you to all our keynote speaker, distinguished panelists, and everyone who joined us today. We hope today's discussion has demystified the IPO process and, highlighted the capital markets as a strategic platform for sustainable business growth. As you heard, successful listing begins with early preparation, strong governance, and the right partners. So if your company is considering an IPO or exploring other capital raising opportunities, we'll be pleased to support you. And for further information, you can reach us at businesssolutions@africaprudential.com. And yes, the recording will be shared with all the participants. Thank you for your participation. We look forward to partnering with you on your capital market journey. Have a wonderful day.
Thank you.
Thank you, everyone.
Thank you, everyone.
Thank you, everyone, and enjoy the rest of your day.
Thank
Bye.
you, everyone. Bye.